Let me be real with you guys. One of the most overlooked and underused tools in trading is the Fibonacci retracement. Okay, but not just drawing it for the 61.8% like everybody else. I'm talking about combining it with premium and discount zones and understanding that the optimal trade entry, or OTE as they say, right? Most traders thinks it's just lines on a chart, but it's really not, right? This single tool can improve your discipline, your patience, and your win rate all at once. And by the end of this video, you'll understand exactly how to use it and why it does that, right? So the problem is most traders slap the fib on random swings. They don't care about context, right? They say a pullback, draw a fib, and hope price bounces at 61.8. That's not trading. That's gambling with geometry, right? What makes the fibs tool so powerful is how you use it. When you combine it with premium and discount logic, trend, stuff like that, you're no longer guessing, right? You're literally measuring value, what's cheap, what's expensive in a given range. Basically, like if you were to look at gold here, if you were to put the fib down on this leg here, obviously you're gonna get a deeper pullback or something because we're so bullish, right? But on the other hand, if you were to put the fib from, let's say, here to here, you'll notice that we bounce right at the halfway point. If I was to put the fib down from here to here, you'll notice that we bounce right at the OTE point. These two areas are just so good when it comes down to like confluence stuff like that, right? I'm sure if I was to put on here to here, guess where we bounce again, right? Right at the 50% mark. So it's just kind of unique, like a universal thing that the price does, simply because trends look like this. You guys know, right? That's a trend right there. And what that means is that this price needs to bounce somewhere. Now, the ideal entry is right here, right? But how do you time that? How do you make sure that the market is going to go there? Well, you just wait, and when price hits that 50%, you wait for a confirmation to go into the trade, and this way you're following the trend, and you're aligning yourself with the best probability possible to make a or to be in a winning trade, right? Um it's not about predicting, it's about positioning yourself to be in a better entry, better RR, better trade, right? And that'll carry on in the future to much more success. So let's break down what I mean by premium and discount, right? Imagine you're shopping. Something is worth $100. And anything above that is premium. You're overpaying for it. Anything below that is discount. You're getting it cheaper. The market works the exact same way. When you take your fib tool and you measure a move from a swing low to a swing high, that 50% line becomes your fair value. Above it is premium, and below it's discount, right? You only want to buy inside discount and you only want to sell inside premium. That's it. It literally is the difference between trading with smart money and trading against it, right? Institutions accumulate positions in discount and they distribute positions in premium. If you're buying in premium, you're just providing exit liquidity basically for somebody that's smarter than you, okay? If you're shorting in discount, you're selling to the same people who are getting ready to buy as well, right? Just by respecting this concept alone, you filter out like 80% of bad trades and you stop forcing trades where price has no business being touched. It forces you to be patient, is what I'm saying, basically, right? So if I was to take this line and draw it out again, right? You can see right here we enter the discount and we bounce off it instantly. This right here is discount. This right here is premium. Okay. Now, because our trend is bullish, you want to only buy in discount, not in premium. You just wait for that move to happen. It's as simple as that, guys. The Fibonacci retracement itself is built around key percentages: 38.2, 50, 61.8, 78.6. But the most important one for us is the golden 61.8, which is this one right here, right? This orange like box that I kind of have built. These are my fib settings, by the way, if you guys want to copy them. I do have the 38 as well, but I don't use it simply because I like it looking at it this way. Um, and that's really just a me thing, honestly. But yeah, the 61.8 is the golden ratio. It's a mathematical constant that shows up in nature, architecture, financial markets, obviously, right? Markets love to rebalance around this level. And the reasoning is very simple. When you look at the 61.8 or right here, when price gets there and tends to get there, here, let me put it on this one, it causes a fear in a lot of people. It makes people want to short, want to sell, but your trend is bullish. Who do you think made more money in this market? People that short or people that long, right? So you have to ask yourself, what is the trend? And then when price gets here, as long as price doesn't break through this low and close below it, there's no reason to be bearish here. This is all inducement. It's just forcing you to be patient. All these lows mean nothing to me. It's significant low to significant high. Okay, and we'll get into that a bit later, right? price kind of often retraces around that zone before continuing in the original direction, right? But here's the thing, you don't just use it by itself. Obviously, you combine it with structure, with bias, with trend, with your draw, and really anything you want at this point, right? The OTE, or optimal trade entry, is a concept kind of popularized by ICT, and it's basically the sweet spot, right? That's 61 to 78. And that's where the market gives you the best risk to reward and the highest probability of continuation, because you're still in your trend while being at the best possible end, which is why it's called optimal trade entry, right? When you draw your fib from low to high, that zone is where smart money kind of reloads as well. They sweep liquidity, some of the inducement I showed you guys right here, they sweep all these things. Um, and they rebalance and prepare for the next leg, right? So if you're long bias, that's your buy zone. If you're short bias, that's your sell zone. Everything else is just noise and you need to cut it out. And just from doing that alone, your win rate will go up so dramatically you won't even believe it, right? So why does this zone work so well? Because that's where the market clears the stops. When everybody who bought early gets stopped out, that's when the institutions enter. It's also deep enough to give you a solid entry. Not so deep yet that the trend failed. By the time the price dips into that pocket, you've filtered out all emotional entries. You're getting in right after the market has rebalanced. That's where the real money steps in, and that's where you'll be able to be, or to see long-term success, right? The goal of this kind of trading career is to see long-term success, not one trade that wipes it all, right? So you need a simple, effective strategy, and this is a really good tool to increment that strategy, right? Um, Again, I just showed you guys an example on gold. I could show you guys the same example on flat. I can show you the same example here, right? You put your the low, the high. Well, you know what? This one missed it by just a bit, so we'll call no trade on this one. But let's use this low to this high, right? Right there, right in that zone. Look at that. Perfect entry right here. Literally to go to your TP. And the thing is, you need to use a significant low into a significant high. It cannot be random lows, right? This low stands out to me and this high stands out to me, right? Realistically speaking, I probably would have put it here, but after seeing this leg break higher and not retracing back to equilibrium or the halfway point, you need to extend your fib, right? If you were to watch this thing print live, that's what you would do. Also, super important. Whatever time frame you use your Fibonacci on, that's where you want to TP. So if you have the fib on a 1 minute, let's say, right? Let's say you want to enter here. Okay, we'll just kind of, our trend's bullish. We want to enter here, whatever. We react off around that area, and we start going back up. You're not gonna want to target 15-minute highs, hourly highs, 4-hour high, four daily highs, whatever, right? You want to target the high that's basically being used for benefit the Fibonacci, right? So if I was to enter here, I would never set TP to, let's say, this high, right? You target this high right here, and that's how you get solid entries on any time frame, really, right? I could do the same thing on the fucking 5 minute, right? And put it here, enter here, bing, 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 target this 5 minute high, right? As long as whatever time frame you use your Fibonacci on, that's where you want to put your TP, okay? So if you were to go on the 4-hour, let's say on NQ, right? And you take this significant low to this significant high, and you look, where did we bounce? Oh, what a surprise. Right in that OTE box, you want to target this high. You can target all these highs for intermediate, like, kind of structure or whatever. But this high right here is the most important one, okay, that you want to target. Anything on the left of this, if we did have price action on the left of this, is kind of optional, and you can just decide to kind of send runners to that area, but your main TP should be around or at the high that you use for the Fibonacci, okay? I also do want to point out that it's important to use the Fibonacci with some type of confirmation for entry. That could be inverse for value gap, breaker structure, CISD, anything you want, okay? But basically, anything goes. It's just about finding where will that optimal trade entry is and then confirming your bias. That's literally all it is, okay? So if you guys really want to get serious about trading, if I was you, I would practice the Fibonacci and kind of set it up and stuff, and just look at how accurate and how precise the Fibonacci retracement tool really is. Okay, it doesn't just boost your technical accuracy; it trains your mind too, because you have to wait for it. You can't just enter because it looks good. You wait for price to retrace, for your OTE zone to be hit, for structure to shift, and that wait alone builds your discipline. Okay, you're teaching yourself not to chase impulsively. You're kind of trading like a sniper, right? Not a machine gunner. It's also way less stressful. You know your plan, your zone, your setup. You wait for price to come to you. You wait for it to confirm. You enter. You're way more confident in your setup. That's patience, and patience pays, literally, guys. So let's talk numbers for a quick sec here. When you only trade from OTE zones, right, you're increasing your chance of catching continuation moves by a lot. Even your RR goes up. Most trends, whether in indices, gold, or forex, tend to pull back around 60 to 80% of the leg before continuing. So statistically, you're trading in alignment with probability and not emotion, right? It also improves your RR, like I said, because you're entering deeper, your stop is tighter, your profit potential is bigger. You need to put your stop at the low as well while we talk about that subject. If you were to enter on OTE, let's use that same leg because it's basically just a good example, right? If you were to enter at OTE of, let's say, this leg, whatever, I'm pretty sure it's going to work out. So if you, let's say you were to enter here, your stop, let's say you end up entering, I don't know, right here. Your stop is not at this low. It could be at this low if you want, but me personally, when I use the fib, I like to put my stop. What did I just do? I like to put my stop at the low of the fib and TP at the high of the fib. And you can send runners to the rest, right? No problem. And you can even re-enter a trade. So you can enter this trade right here off confirmation, whatever. The high is actually here. You target your high, right? That's a 1 to 1.6, which is a very decent trade, honestly. And you enter right there, bang, bang, bang. You start seeing some nice momentum. It pulls back, whatever. Let's say this price pulled back a little bit more. You can re-enter another trade right here. And now you can put your stop there. And now you're in two trades, two winning trades. You're aligning yourself with the trend. You're letting your winners run. You know when to cut your losses. And that is how you get longevity in this game, okay? The next time you're analyzing a chart, don't just draw the fib and hope. Mark your swing high, find your equilibrium line, identify your OTE zone, identify, is this a relevant swing high and swing low I'm using? Is this the last leg of price action, not anything before? And then ask yourself, am I in a discount? Am I in a premium? If you cannot answer those questions consistently, then you need to be able to do that, because if you can, your trading will change basically forever. Okay, and that was the most overlooked concept in trading, and it's been hiding in plain sight the whole time, but it's the most important one of them all. If you guys like what you heard, please like, follow, and subscribe. You can't follow on YouTube, my bad. Please like and subscribe. You guys can comment down below with your thoughts and stuff. You guys can also join the free Discord. The link's in the bio, and I'll catch you guys later. Peace.